So hey guys, welcome. Today is Monday. I will make a quick trade breakdown. So as you can see right here in the daily chart, we have a really bullish day. We had SMT with VS on the daily chart, so that's really interesting. So on NQ we did take out the low right here. On ES we did not. So bullish SMT. For NQ it's obviously a bearish SMT, but nevertheless, we opened up higher with a huge new day opening gap. And let's drop to a 1 hour chart. So really interesting right here. So right here we basically formed our low, and we have also SMT. Therefore that's our smart money reversal. And we also have a change in the state of delivery with basically trading above the breaker right here, which was used as resistance. So right here it's a bearish order block, and then we trade above it, and then now it's basically a bullish breaker. And right here we have the new day opening range from today, not not the day opening range gap, but the higher time frame gap. So the new day opening gap, that's the right term. So, and what's also really interesting is the fact that we took out Asia lows and London lows, so therefore we have a market maker buy model within the 1 hour chart, and also like right here with our sessions. So also like basically on the 50-minute chart, it's more obvious to see it. So right here we took out Asia lows, even London lows, and then we are trading higher. So because we are in bullish conditions, we expect that we will basically expand to the upside, and that with trading to the downside, that's only a retracement. And before I drop lower to the 1 minute chart, I want to show you basically the price range I took from the high right here to the low. And right here we have consequent encroachment, and we have the upper quadrant, which we basically reached right now. Why? Because for a market maker buy model, we want to target external liquidity, but always the upper quadrant of the price range is always an important target. Because if we trade only a retracement, we would retrace from here, so reverse from here. But if we are in a market maker buy model, we will expand higher. Nevertheless, even if the market maker buy model is valid, the upper quadrant is, or the lower quadrant in that case, because we have a market maker buy model, the upper quadrant is still a really important draw for price. So now I want to show you regular trading hours. So right here you can see we opened up higher, really bullish. So basically our new opening range gap is larger than 120 handles, therefore we are in really trending conditions. And since then we had a only up day, so we did not trade back to the upper quadrant or consequent encroachment. We were only trading higher, and I think there are multiple reasons for that. So one is basically that our new opening range gap is within the bearish order block right here, so therefore we don't really have to trade down there. So because it's more protected, I would say. We also have obviously the high time frame draw, which is higher, so we are really bullish on the higher time frame. And if we take a look on ES now, we will see that we formed a SMT. So let's drop to the 1 minute chart. So right here on ES you can see we traded higher with the opening and then traded lower, and we formed a bearish SMT. I don't really know if that would be enough to trade back to the upper quadrant of the new opening range gap, but still with that we basically have a market maker buy model in play as well. So we also basically now have a lower time frame market maker buy model, and I will show you now my execution. So right here we have the 1 minute chart of NQ. So right here we have the midnight opening price 930 and 830. The New York Open kill zone says the liquidity is untouched. We swept Asia lows and London lows. and we had basically the bullish SMT right here. So I was looking with the opening for shorts because basically, as always, when we have a new opening range gap higher on regular trading hours, and with 9:30 we just trade higher and higher, and we already scrapped every session buy side liquidity, then we are in a really good position to basically trade a retracement or expansion basically back to the New York Open kill zone sell side liquidity or to the opening prices, especially because we are already above the midnight opening price, 8:30 as well, and even 9:30, and we scrapped equal highs right here as well, so external buy side liquidity as well, and even equal London lows and New York Open kill zone buy side liquidity. So yeah, in that case we are actually in a really good position to take shorts. So therefore I entered right here a bit late, yes, but I also added right here because if we are really in the right, so if we are in the right on the right direction, I would say, or on the right side, we would have basically expanding to the downside, to the 9:30 opening price, to the midnight opening price, and back maybe to consequent encroachment right here, and also the New York Open kill zone sell side liquidity. But we failed to do that. Basically, we formed a bullish SMT. Therefore, I know, okay, we now have a lower time frame market maker buy model being in play as well. So that's also kind of a smart money reversal. And then we can target longs. So with basically trading above the bullish fair value gap right here, we also have CSD. So we are now in the right time. So 10 a.m. that's within our macro. We have SMT. We have a change in the state of delivery. We are trading aligned with the higher time frame, and therefore that's a really valid opportunity to basically look for longs, especially because we still want to reach the upper quadrant of the hourly price range, as I showed you before. And then basically because TradingView was lagging, I bought twice because my position wasn't showing in real time, so I could not see if I entered or not. So therefore I had to sell 2 contracts, right? I don't know how to say it, directly afterwards, basically. So and then we kind of failed to find support in here. We traded below the suspension block, and I took one off right here. I don't really know what the reason was. I think I was just mitigating because we were really bearish. I think I had my stop first below the inversion fair value gap and traded then below the high time frame gap, and then I just added here once again and then mitigated once more right here, added once more right here as well, and then we finally could expand to the upside. I took my first partial right here because we basically just reacted off the high right here of the high time frame gap and also of the quadrant level. And then we broke lower with the London close macro. So because we still have to reach higher prices, the London close macro is not a reversal. So we should not expect that we would retrace lower. It's only a really small retracement, a short-term run on stops, and therefore later on we trade high as well. And I think I got stopped right here, so I'm really content with that. Actually, with a wider stop, we would have even reached our objective. So we would have reached the upper quadrant as we wanted to see. I was really convinced, and I really had a huge conviction today that we would reach higher, just because of the fact that there are so many market maker buy models being aligned, so on the lower time frame and more importantly on the higher time frame as well. So but I'm really content with the trade. I'm not really sure if my money management right here is the right approach. I'm definitely basically making sure I didn't lose too much with that. But yeah, I basically traded only 2 setups, and with always like taking a small loss, it's just yeah, still adding up. And also with buying later or adding later on, I trail my position higher. So therefore, I basically minimize my win, or I not minimize, but I smaller my percentage I can win. And also I have to trail my stop higher if I want to basically keep the same risk. So yeah, it's not, I don't know if it's the best approach, if I just should basically enter right here and then leave my stop all the way below the inversion feather gap, even if it's a bit a high risk. Still, I don't really know. Yeah, I have to see, but I really like my partials right here. Yeah, if I would trade more partials, yeah, it's just way easier to hold for runners. But with only 2 partials, yeah, it's just way more risky, especially with taking losses before. So therefore, I don't really want to, yeah, hold for too much, especially because with lunch we sometimes can reverse or retrace, even if we would basically reach the upper quadrant eventually. We could also like retrace with lunch back to the levels right here, and then with the PM session we would trade higher. So therefore yeah, it's just more a probability game. So therefore I'm content with if I trade like only 2 contracts with taking partials right here. But to leave a runner for the upper quadrant would have been definitely perfect, and yeah, also very possible. So yeah, really interesting trading day. And I think basically that's it actually. So I'm content with the first loss because yeah, on ES we could deliver lower regarding the high time frame situation. It's maybe not the best approach, but yeah, I realized we are definitely bullish, and I really like my continuation setup to the upside. Yeah, what I wanted to say as well is basically why we had high resistance in here, and I think it's basically due to the high time frame, because if we zoom out, we basically can see that we formed our low right here, and all the way from here, basically our market maker buy model is already in play, especially with trading above the breaker. But even if we take the lower time frame market maker buy model, so still the higher time frame for the 1 minute chart, but the lower time frame from the hourly chart, we can see that if we take basically our Fibonacci extension tool, we can see that right here, basically at the -1 level, we are already yeah, at a expansion target. So basically I added at a relatively high price. So we definitely do have higher targets to reach, but adding with, so right here we reached I think the -1 level. Yeah, so right here is the -1 level. So therefore we consolidated and yeah, could not really expand right on. Yeah, that's, I think you can say that. So yeah, consolidated. We had high resistance, but then also the London close macro used the -1 level as support, and we traded higher. So yeah, basically the the best approach to enter is below consequent encroachment, definitely, but in that case it's just not really possible. So for a continuation trade, we have to wait for a short-term run and stop, for a lower time frame market maker buy model to be in play, for a sweep on liquidity, and then the right time has to be in play, combined basically with CSD, and that's and we only get that with trading above the inversion feather gap. Therefore, we are definitely buying high prices, even also because we are above the opening prices. That's also like how you can illustrate higher prices. But yeah, so therefore we have just to be more patient, keep a wider stop and high resistance, and eventually we will reach our narrative as we did our objective. So yeah, really nice trading day to see the setup play out. Is always yeah, nice to see. So I think that's it, and yeah, see you soon. you.